All right, start the recording. And we're going to do screen share here. All right, first thing, just to, because I am using this for my weekly update, is I'm going to show the account on the YouTube challenge. So the goal for this week is my current contract size is 2 per trade. I do a 20 to 25 point capture per day, which should equal out to about $480 a week, according to the ICT micro trading strategy. So I hit 600, went over that, which put my total account liquidity on the Apex PA to 52.6, which means that I'm above drawdown by $1.27. Sweet. And I'm withdrawal capable, so I could withdraw. How much? $2,000? What's the max withdrawal, Cameron? Do you
It's
know?
2,000 for the
2,000.
50K.
Obviously, I'm not doing that because that would be retarded. But as long as I maintain this equity run, I'm not going to have to worry about trailing drawdown. It'll operate more like a top step combine, which is super nice because Apex trailing drawdown is miserable. Those of you who are painfully aware of that.
True.
Okay. All right. So that is that account. Happy with that progress. As you all know from the one clickbait thing I posted earlier this week on Sunday night, I don't know, temporarily insane and lost like $600, but was able to claw back on Monday and didn't take a losing day because it runs from 6 p.m. to 6 p.m. So still got that sort of winning streak. I'm not that concerned about the winning streak. I'm more concerned with how I'll psychologically handle a daily loss. So as Cameron and I have told you guys a bunch of times, anybody can learn to trade, but the real trading model is your discipline, your patience, and your consistency. So we'll get into that as we go into the trading stuff. All right. Looks like my webcam's trying to do something weird. So I'm going to unplug that. All right. All right. So what I wanted to show was on NQ on the daily real quick here. Go to where I have my notes. All right. So this is the daily chart for NQ. March 8th, 7th. Okay. So March 7th, trying to use this for a bias sometimes is good, sometimes is hard. So if you were going to look at this, we swept previous day's low and then we closed above the high and we have buy side liquidity, sitting up here. So normally I personally would say that, oh my gosh, we are going to go for buy side. Okay. The next day, which is going to be the 8th, I would think that we would sweep up in here. Okay. So what I normally do in the morning is I come in to the previous day's high, previous day's low. Okay, and we have that. So I just have those marked. So if we go down to, we're on bar replay, which I like because you can change the time frame without it resetting you all the way to the current stuff. So we're on the March 7th. We're going to go down to the hourly. So what I'm looking for here is, because I'm mildly bullish on the day, I'm looking to see what we do with buy side because I'm expecting us to take it. Now, I didn't see a setup to take us in, but what I saw was, hey, here's my red box for my overnight session. Okay, so we have, I think this was an 8:30 news candle that caused this large candle here. All right. Next candle, we sweep and close above both, right? So we swept above previous day's high and close, and we swept above this buy side liquidity and close. So these were daily targets, but the way I have them marked, you can see they're also hourly targets. Hang on, my mouse just freaked out on me and won't move. Can you guys hear me still?
Yeah, it froze for a second. You're good now, though.
Yeah, it says encoding overloaded. Consider turning down video settings or using something. I have no idea what it's talking about.
I think it's just because you're on 60 FPS, maybe.
Oh, yeah. I don't know how to change that.
It's all good.
Okay, so we swept these hourly targets, and we closed above them. So we're closing above liquidity on the same time frame. All right. So then if we go to M15, because I'm not going to take entries on an hourly chart. That's just too much risk. So this is hindsight. So I will say though, if I see us going up and closing above like this, I would expect expansion to keep going. This is also near like previous all-time highs, which is extremely difficult to trade for me because you don't have a lot of data to the left to work off of. But this is also where, okay, we closed above these highs. Are we going to keep going? So here's our 15-minute candle formations that happen. We do keep going above. And now we're reversing. So you say, okay, well, is this just a pullback and we're going to keep going? So if you guys remember the inversion thing I just posted, which is pretty awesome. We've got a couple 15-minute fair value gaps here that we're going to look at to show you how this works out here. So we're watching price, still bullish, thinking, okay, well, we're retracing into this. Do we take a long back off of it? No, I don't know. We're wicking it. Still bullish here. Okay, that's obviously not bullish whatsoever. So that 15-minute candle just came back down and smoked both of those. All right. So now you're looking for, I would say you could start to lean a little bit bearish because now we're all the way down to the bottom of my overnight session profile, and you can maybe use the bottom of this wick as a target. So we close below both 15-minute fair value gaps. You drop down to 5-minute and see if it plays out there. And then we have a 5-minute fair value gap here. We close below that. And then if you're asking me, when you guys trade these unicorns, one thing Dodgy said that is really effective, step back from your screen and look at the chart, and the swing points become obvious. Sometimes I see people looking at clean price runs and picking one random up, close, or down, close candle and calling that a swing point or a breaker, and it's really not how I do it anyways. I like to look for obvious swing points. So to me, this is an obvious swing. This is an obvious one. This is obvious. This is obvious. So on the 5-minute, we have this. It's not really a breaker, but it's definitely an order block that took this high up here. And we just closed down through it. So you can call that a unicorn if we came back up in there. And that would give you confirmation on these 15-minute inversions, right? If you come down to the 1-minute chart, I never trade the 1-minute chart. You have to talk to Cameron about that. But if you look at the 1-minute chart, this is definitely now a breaker because it has the high, the lower, lower low, higher high, and then we close back down through. Cheat code over here, this little indicator I've mentioned was how I even started trading this. It marks it as a breaker. That shows inversion fair value gaps. Those are fun. All right, so on the 1-minute, session profiles, also a good indicator. If you take this breaker here and you were looking for an entry on this, make it blue so it'll be easier to see. You can see you got your breaker entry right there. And then, oops.
Another thing I want to add to that is like you see that breaker, how it expanded straight up to make all-time highs like right before that. Like after that first order block was made, you see how it just went straight up to the right?
This?
Yeah, like that's the kind of displacement you want because all those orders on the way down are just getting liquidated, and then once it comes back and touches that area, that's like they could either close orders or sell short from there. All that kind of stuff.
Yeah. So this move, if you took this entry, that's 145 points off of a M1 unicorn setup, which was set up from the daily, which was set up from the hourly, which was set up from M15 with very simple PD arrays. All we were talking about was basically the internal to external rotation for the daily bias. Then we went down to H1. We were bullish, but there wasn't really a lot of setups bullish, and then it definitely inverted because anytime we see a sweep of highs like that, you just got to be prepared for what happens. You don't necessarily want to be longing at the highs. Even though it did close above them, I would still expect a retracement, then an expansion if it's going to. All-time highs, that's very difficult for me to do. Cameron and I have talked about that quite a bit. Anytime we hit all-time highs or very high, I want to short. So I have to stop myself from doing that because it keeps
And
going
that's
higher.
NFP low, right? That it went into.
I think so.
Yeah, I'm pretty sure that was Friday of like 2 weeks ago or something.
Yeah. Did somebody? Oh, is there a chat channel in here? Did somebody put something in voice chat channel?
Yeah.
Oh wait, here it is. I see it. Yeah, the video set mentioned there should be one fair value gap, not multiples. Right. So I know. So what I did on this when I was looking at this, when I saw this, here's a 15-minute. There's two of them. If you go to the 30-minute, you don't really have a fair value gap in here. You have this, but I'm not using that. You could, but by the time you did that with the 30-minute, you're all the way down here. So yes, you're right, Gavin. But on the 15, you got to look at it this way. This one was respected, bullish order flow, came back down, pushed up. This one was wicking into it, and then the reason I think this is a valid trade according to what Dodgy says, this one candle smoked both fair value gaps simultaneously. We didn't come back down and bounce off of it or anything like that. That was if you want to talk about displacement, I mean that almost displaced all the way through this low, almost closed below it. So I'm fine with that. But then I dropped down to the 5-minute, and here's another fair value gap in here that was displaced through more up here. I get that. But this structure I was fine with that. You could have put your risk on if you had entered here, like Dodgy says to you. You would have put your risk on up to the top of this fair value gap or something. I honestly, when I would do an inversion, I prefer to have a price come back into the inversion and touch it before I enter. If that answered your question.
Another thing I would add too is like when you're looking at inversions, if there's multiple, you always want to look at the initial fair value gap that like swept liquidity or made the high.
Mm-hmm.
So like that upper one was the one that made all-time highs again, I think, right?
Yeah.
Yeah. So like that's the one I would key on in terms of like once that gets closed below. And then another thing you could do, which like I mean this is more advanced, but you could go to like a 1 minute chart. I don't even know what it looks like there, but if there was something on the 1 minute chart, like did it make another fair value gap inside of that little zone too?
Inside of here?
Yeah, you see how the 1 minute candles like close below and then it just displaced down. Like once you got that first displacement through it, you have like a whole fair value gap there to gauge and like use as defense against your position if you were to like enter straight off of that.
Yes.
But obviously just keeping it to one time frame and looking at like the fair value gap that initially swept and then keying off that is probably your best bet.
Yeah. 5-minute, whatever, order block, if you want to call it that. And then this is just straight up close candles all the way up. So, and you guys have heard me say that a bunch of times too. You need to look at the quality of your displacement. There was a gentleman, I don't know who it was. I don't know if it was you. No, it wasn't you, Gavin. It was somebody else in Ash's Discord who took a 1 minute. Oh yeah, Cameron I talked about. He took an M1 unicorn long when I had said I'm still bearish, man. There's not been a CSD to the upside to cause me to not be bearish. And the displacement, you can't just have a few candles kind of dribble up above your swing point. You want to see strong displacement. Like that's how I first started looking for these trades, was looking for a swing that had a really strong displacement through it that created a fair value gap right over top of that swing point. That's how I first started doing it, and that was obviously really good. Fair value gap positioning, I feel, is the thing. I know Ash does not key in on that as much. I'm sure he does when he's looking at it, but he has to keep his model to a certain way to where it's digestible, which is great, and it's a good model. I don't put as much bias on the time frame alignment as he does, although I do integrate that quite a bit. But I'm more just looking for a high time frame PD array or liquidity pool to get taken to form the unicorn. Gavin. So basically, the fair value gap which took liquidity, if it got violated, I'm never gonna say yes if that happens. Enter a trade based on solely that.
Yeah, I would say with that, like since there is multiple fair value gaps in that leg, that's why people who trade inversions, they usually don't like those setups because say if you enter off the closure of the first one, you still like haven't broken structure yet, and you still have another fair value gap that could bounce below it. So it's going to be higher probability if that second one's not there, because you could just enter and there's nothing really like in your way for price to jump off of, if that makes sense.
So you're saying, Cameron, you would wait for the second one to be closed
Yeah,
through?
in this scenario, or I'd
Yes.
look at like structure and how it closed below structure, and then that would have given you like the confirmation there to just slap it.
Right. And remember, guys, we're not, well, Cameron will go over inversions more in a second, but I'm just using this as confluence to what I was already looking at. Remember, we were long biased on the daily, but then we swept major liquidity targets, which we thought we would. So now we're kind of like, all right, well, now the bias doesn't really matter because my target's been hit. So I don't have a bias. What am I going to do? Take a continuation when we've swept previous day's high and I think maybe all-time high, if that's what that was? I'm certainly not looking to long that. What I would be interested in is seeing if we get a strong reversal with now bullish PD arrays getting wrecked and bearish PD arrays being respected, which is what happened. So that's why I thought this was a really good example, because everybody asks a lot of times, how do you know when to change your mind? This is when you have your high time frame targets get taken, you don't know, nobody knows where price is going to go at that point, and that's what you look for. You look for previously respected arrays to get wrecked and for newly formed arrays to be respected. All right.
And you
Questions
always
on?
want like a draw on liquidity that like if it has not been met to the downside and we're still respecting bearish arrays, that should be your green light to potentially just take whatever continuation setup you see into that area.
So Beam, what you just asked, if the daily is bullish but we took buy side liquidity, what would make you switch bias? That was the entire trade model I just showed. So if we go back here to the daily, right? I wish there was a faster way for me to do that, like zoom in where it's at. If you ignore this candle, and all we have, we're on March 7th, right? So we wicked down below, swept that. The premise I always operate off of is if we're at a liquidity pool and we wick through it without closing through it, I expect expansion to opposing liquidity. If we close through it, I expect retracement and then expansion through the liquidity further down. So if we had closed below this low, I would expect upbound. Okay. If we wick below this low like we did, I would expect price to continue, go down then up, whatever. So that's just how I look at it. I think I got that from Cameron and Kish, the currency merchant. Cameron probably told me that a million times, and then I listened to somebody else say it. I was like, oh man, did you know this? And Cameron's like, are you kidding me right now? I told you that like 10 times. So that's kind of our relationship.
Fair enough.
Yeah. So Um, so this candle here, bullish because we closed above this high if you're going off of that, rotations, closures. So we have these targets here for the next day. We have this high and we have this high. So this candle, as it formed, here's March 8th. So actually we came in, this is for Beam just to go over real quick. We came in here. Here's our ONS profile, which is my time frame is 4 a.m. to 8:15. Why is that off?
Maybe because daylight savings was
Oh
around there.
yeah. Oh well, that's irrelevant. Either way, we all know this is the either open or news candle. So price came up here, swept above previous day's high, and it swept above our marked buy side liquidity on the hourly chart. We had already seen that happen. So we were using hourly closure for hourly targets. Here's our high buy side. Here's our previous day's high on the hourly. This hourly candle closed above both of them. All right. So to answer your question, Beam, daily's bullish. We took buy side. What makes you switch bias? This. Okay. 15-minute chart. We came up here, closed above, and then we all of a sudden started reversing and previously respected bullish PD arrays, which is this 15-minute fair value gap here and here. One candle came through and smoked both of them. Now, on a 15-minute chart for that to happen, that's insane. When we were sitting here watching this, I probably was just shorting while it was in free fall. I know I made like $200 this day, and I do remember last Friday being like a crazy dump. I don't know if this is the day, Cameron, you said that you missed the short you've been waiting for, if that was this week.
Oh yeah, I think that was Is this Friday? Is this
Yeah.
Friday? Like yeah.
One of the
It happened quick too.
It did. Yeah, it was fat. One of the days you were mad because you weren't able to trade it and you were dealing with your car stuff or
It,
something, and I was like, no. Yeah. So Beam, that's what is that? Yeah. Okay, good. So changing your
and the fact
bias.
that
Yeah.
yeah,
No, go
what were you
ahead.
gonna
Go
say?
ahead. You go ahead.
I would say the fact that we had a NFP low still intact after forming that and inverting for value gaps, because that was the big green candle at 8:30 on this day. Once we invert two fair value gaps towards such a massive liquidity pool like that, because you got to think like during news, you know how many positions are being added at that time. So that's going to be like a very juicy draw on liquidity in terms of like once we're heading to it, we're usually just going to beeline it.
And the major thing too, guys, is when is this happening? These candles are. I don't know why my time frame is off here. I don't even know if I can fix that on replay.
Probably not.
You know what? I know what it is. There we go. That bothered me. Okay, so there we go. So this happened here. You're gonna get into this 15-minute fair value gap, or here, I think it was. If you go to the hourly, you've got I don't even know. Did we take previous day's low this day?
Maybe off NFP. Not sure. Yeah, I think NFP swept previous day low.
Yeah, this is Sunday. So where did we stop at? Right here. I mean, you're all the way up here. I mean, yeah, I remember when I looked at this, I was like, oh my God, that was a 250 point move. Talk about a super corn. Just kidding. Super unicorn.
Yeah, off all-time highs too, which is crazy.
Which is insane. Okay, so good enough. Overnight. I'll just do a real quick. Overnight session is from Kish, the currency merchant. He teaches it. I think he released the videos on his free YouTube. Okay, there's price ranges that everybody's looking at. Like we're ranging in this candle price structure, this fair value gap and stuff like that. And you use those as ranges, this high to this low, right? So ONS profile, there's also a time range. Like if you have a macro window, this group of candles did this during this particular time, and that's how you can identify what the algorithm is thinking, what it's doing. It's not necessarily just where the candles are, but when they are. So I just happen to feel comfortable using this range from 4 a.m. to 8:15. If things happen before that, I don't really care. This price doesn't matter to me. It only matters to me if it happened after 4 a.m. It's a timed range, and the Kish teaches certain ONS profiles of that range, how price reacts at the highs and lows, and it's just been extremely accurate and extremely effective. I mean, my current account trading should reflect that. Yeah, so that's how I use that. If you want to know more about that, delve into it. I don't use the profiles quite as much. I more rely upon it just for the highs and lows and mid and equilibrium for retracement. It's based on what price does. So that's my 2 cents on that. All right. Any other questions about this price action before Cameron? So you would talk about inversions, right, Cameron?
Yeah, I could just show like this week, like how I used a couple of them.
Yeah,
Or
that'd be
just
great.
cool.
All right, share your. You want to do your screen
Let
share?
me see.
And guys, Cameron's been trading. We've been trading about the same amount of time, almost exactly, I think, or pretty close to it. A
Yeah,
few years.
that's right.
Cameron is one of the actually profitable traders that I know that can prove it with his. If you on his Discord, he has thousands of dollars in payout certificates. He won't tell you that, but I'll tell you that on his behalf so you listen when he's telling you this stuff, okay? I'm talking a
Thank
lot.
you.
So he definitely isn't just going to say something and just trying to get so he's not even trying to do social media right now, but he definitely is a funded paid out trader that's very successful. So take the floor, Cameron.
Thank you, sir. Let's see. I'll just go back through. Let's see. Yes. All right.
Wait, let me
Let's see. We'll just look at this week. Wasn't Monday super choppy this week?
how do I look at your here?
Can you see my screen?
Yeah, I just need to get
All
your
right.
screen down here to be recorded though.
We'll go Monday and we mark out open. Monday was just super choppy, but the first thing I always do is just look at to the left and any draw and liquidities that we've yet to be met. This looks a little interesting because this was the old contract before the rollover and
Right.
volume switched over, but these levels are still going to apply. So if you look at Monday, let me go to 1 minute on this. All right. So what I always do, this is me 9:30, is right once we open, I always wait for the first fair value gap to form. And you see how we formed one here, and then we came and tapped into a liquidity pool.
Mm-hmm.
This is like a bread and butter setup for me usually. But we come and sweep this, and then at that point, I'm waiting to see what we do in this fair value gap. And if you notice here, this is a 1 minute chart, which I just use because when we're in an opening range like this for like the first 30 minutes, price is moving so fast that if you're trading on like a 5 minute, you're probably going to have to wait and kind of be trading after like the initial push already happened. But you don't have to necessarily enter off this, but you should be looking at this to maybe gauge like what direction we want to follow through to. So if you look at this, we inverted this first imbalance, and this is at like 204. You could have entered right there with a stop below. So for inversions, you can either take this as your stop loss of the initial fair value gap that got inverted, or some people, since there's another fair value gap here, they'll put it below this low. If you look at that, that's like a 15-point stop-ish. And then you're always just going to want to target like the opening highs. And if you see here, they were just so smooth.
Yes.
So that's just a quick setup there.
That's a really good point I didn't address, is your take profit on, especially on the M1 chart. You're just like Dodgy even said too. Sometimes you're just going for the next immediate swing high on a formation
Yeah,
like that.
especially on a Monday. Like to be very specific, is Mondays are generally more rangy. So you just want to make sure you're getting the easy points in, which in my opinion, this is an easy thing because we swept that low and then look at we're expanding off, which these people who tried to short off open, they're going to be taken out. And as you can see after that, we did come back down, but that whole day we just ranged around.
Yeah, Monday and Tuesday were crap this week.
Which you can train these ranges. Like something I would do for this is I would just look at like when the hour is closing. So this is like the first opening hour. You see we came down and up. So if you look around like 9:50ish, that's when the next hour is about to open. So candles like to show their true form, I guess is a good way to explain it, in these last 10 minutes. That's what like ICT calls macros. But what I usually think about it is just the fact that candles are going to close in preparation for the next open. So for something like this, all these people who were thinking long, as this candle closes at 9:50, the candle's about to show its true form and it hits this fair value gap and then closes all the way down here. So even though these people longed and made money, it's a Monday, so you're not expecting continuation. So these people who initially longed this too all got taken out. And that's the thing with Mondays, is like it's just going to trick both sides all day to accumulate in this range here. I'll just do the first 9:30 of like every day this week because
And that's why a
that
lot of
way,
people don't like to trade Mondays.
yep. And you can still make your money, but I always just set my expectations way lower. All right, we'll go to like a 5 minute again.
Beam, we'll answer that question in just a minute.
Oh yeah, that's a great question.
That is a great question.
Let's
That's
see.
going to require a premium subscription to answer that question. Just kidding, we don't have premium.
Let's see, 9:30. And this first fair value gap thing I'm talking about, you can do it on the 1 minute or 5 minute. The 1 minute's just going to give you quicker feedback, if that makes sense, because each candle's printing. 5 minutes going to be more accurate in terms of just giving you a more better gauge. So let's see, 9:30. All right, so this one opened and made a fair value gap right off the start.
Mm-hmm.
We could hop down to a 1 minute too, just to see what it looks like. I hate trading view for this.
If you use bar replay, it stays where you're at.
Yeah, I'll just keep with this for now.
I mean, not right now. I'm saying, like, I know it's so annoying that it resets you every time.
All right, here we are.
Yep.
All right,
Wow.
so we opened. We just shot straight down on this, but actually we'll use the 1 minute for this just to show. So this was the first imbalance made off open. And we came down, like I said, you would look at like this liquidity pool. And obviously I sometimes like you'll see this first imbalance made and you could short this, but like this didn't really get a clean sweep. It made relatively equal highs here. So I'm not going to want to be shorting against that just in my experience, because if this gets smoked, that's about to like jump here in like a matter of 2 minutes for 30 points. So I don't think that's the best probabilities if you're looking at that. So usually you're going to want to wait for something to sweep down here. And here's a good inversion example, but there's still more liquidity to the left. So in the moment, like you're going to be looking like, oh, it might come down here. So that's why you're always going to wait. But there is an inversion here. And I would just key on any inversion that's through a liquidity pool. Because if you think about it in the moment, this hits here and this is kind of bouncing, like showing green. And then it's liquidating all this liquidity that was actually below this news low. And once that actually happens, you see how we invert here? We get a massive green candle that inverts this low that was made below this big liquidity pool. And you could see the expansion start to happen.
Is your next
And
candle's wick hit 50% of the inversion fair value gap? Just comes right back into
pretty
it?
much.
That's awesome.
Yeah.
That's what I like to see when I take inversions. I want that next candle to just come back in and tap it a little bit.
And then
go
back
long.
what I was saying with like 950 to 1010, I use this every day. And this like, sometimes the pivot will happen right in here, but I always just gauge that in this window here, you're setting yourself up to either get into the hourly close of where you think it's going to close, or you're setting your position up to get into the next hourly expansion. So we hit a liquidity pool and we inverted this like right at 950 pretty much. And then you could have taken this and you're targeting these relatively equal highs. And the 10 o'clock hourly candle starts here. So if you look at this, you position yourself all the way up here. Some people would take profit maybe at like this fair value gap here, or the first imbalance, which you can see it like perfectly hit here.
Oh, it's a huge
Like this
trade. Yeah.
This level gets respected pretty much. You'll see multiple times, like even here, like we kind of consolidate around in it. I'd say this is painting outside the lines because it's overlapping with this. So this is like kind of like a balanced price range.
Mm-hmm.
And at this point, it still didn't even sweep these lows. So this is just kind of like faking people out. Some people will call this like time distortion, because people are sitting here like, oh, I might get out of my position. They're seeing these big red candles, like it's going to come back and rebalance this more. But if you're looking at this, like you're still at this initial imbalance that started off open. So price is just like, this is reaccumulation in a market maker buy model, if you're wondering.
Yep.
And this is first stage distribution, accumulation, and then second stage distribution would be here. And then this is 50% retracement, and then it hits that. I think this is a 1 hour imbalance from that initial drop off. But back to what I was saying about inversions, you could target this. But since you're already positioned, if you think about this, like you're looking at a 1 hour candle that you just got in on the wick of.
Mm-hmm.
Let me take this off so you can actually see it.
Oh, geez, yeah.
Yeah, so when 10 o'clock starts, you have a whole wick behind you that price most likely is not going to just come take you out unless it's some news thing. And if you look at it even closer here, like this is a super high probability order block here, which I think most of you guys know this already, but like the best order blocks are going to be candles like this, where you have a small body here, and the next candle is an engulfing candle. So it takes both sides of this and closes above this entire candle. And that just shows like how many orders were resting in here that didn't get filled potentially. But yeah, so there's lots of confluence here on the 1 hour. But like we were looking at earlier, like I was just looking at the 5 minute. And that's why like in the moment when we swept this, we're probably not going to take this out if we have an order block in the way. So, and it was like the macro time. Like there's a lot you could look at, but it's always better to just keep it simple. That's why I was just looking at like the 5 minute with the opening range and how we left the relatively equal highs.
What does the 5 minute look like at that 18204 area again?
This one?
Yep.
So that's the order block, and this is when it came and tapped into it.
I'm just look. Can you move your chart down a little bit? I'm gonna look see if there's a unicorn set up on that swing eye to the left. There is.
Oh, you're talking about this one?
Yeah.
Yep, you could take that too. And this was the discount of it came into. So some people, the reason I'm marking this whole thing is because this was a news candle. So you have 3
Disconnected.
consecutive up close. So I'm taking this whole range, and you can see how 50% is respected there. And then also what I do with this is I would take the high to low, especially when you're doing a unicorn. And you don't necessarily have to take 50%, but like you're not going to want to take something up here, especially if this is sitting here.
Yeah.
So you're always just eyeballing that.
Yeah, and that was what was the fair value gap below? Was that 1 hour you said?
The order block.
Yeah, it was an order block.
Yeah,
Down there.
1
Okay.
hour order block wicked into, and at the same time we hit that, we were sweeping liquidity, and we made a rejection block. We made I mean, you can call this a
BPR,
BPR, I guess, but
I just wanted them to see that as so it's not just that's a definite perfect unicorn setup. 5 minute high time frame POIs got hit, liquidity swept, strong displacement, retraced right back down into it. So the biggest thing is just being patient and waiting for those setups to happen. And that was a 100 point
let's
trade
see.
easily.
Yep.
On a Monday.
And
I don't know
the
that was Monday.
thing with Apex trailing drawdown that we can talk about is me personally, like my best trades usually come from micros, especially when you're still below the buffer, because you could trade 3 micros and that back and forth, like say if it runs up 100 points and comes back, like, yeah, that's going to suck, but that's not going to blow your account. And what I'll generally do is I'll trade like 3 micros or something, and you'll trim one at different TPs. Like when we were talking about earlier on that 5 minute when it came down right here, my first TP is going to be at that relative equal high. You could maybe have another one here. And then at that point, I'll put like my runner break even or somewhere where price should not return. And then from there, I just hold all the way until whatever the next draw on liquidity is, which in this case, it was the 1 hour fair value gap that was here. And here's another cool thing. I don't know. I think people know what like turtle soup is, but this is something actually Relentless on X, if anybody knows who he is. He made a really good post about this the other day. The best turtle soups are going to be when we touch into a fair value gap and we create something like this, like you see these smooth highs here. We sweep these and we fail to reach 50% of this imbalance. And what that tells us is that price does not want to come and fill this in. It's in a hurry to get to where we want to go. And this is a 1 hour chart, and I didn't trade this because this is at like 3 o'clock. So this would be like a good London session move if anybody trades that. But if you could see here, we hit into the imbalance once, and this imbalance is still open. We come and swept and made a strong displacement through it. So you could have either it'd be pretty ballsy to just take it up here. But what you would probably look for is it made another order block here above that liquidity pool, displaced down below this imbalance, came back and touched this, and then you see we opened price and it just went down. And this is another example of a market maker sell model. We had original consolidation down here, and first stage distribution reaccumulation. Second stage came here. We made a smart money reversal here. First stage distribution, reaccumulation, second stage, and then second stage was kind of blended in between these two because we hit this initial low, and then this was Friday when we just finally went and cleared all of that, which we had this 870 low from like way back here. That was my draw on liquidity. Yeah.
Did that help Beam? Like Cameron, that's how I've found is best to manage it. I honestly feel like if you're trading minis on a 25 or 50k eval, you're wrong. ICT has said the same thing. People who, when we've seen it in the Discord, they are like, "Oh man, I traded minis and I made $500, I made $1,500," and you don't hear anything from them because they blew their account, and it happens so fast. Like it's.
And you think about it, like trading is such
I've
a
done
mental
it
game.
plenty,
Like
so you know,
you'll burn yourself out so quick. Like say if you make a whole bunch and you're just going up and down, like when you're trading micros, you can stack like mental wins, which like so many people don't look at. But say if I'm trading micros and I'm consistently making money with them and catching like way bigger moves, the confidence boost that gives you, because you know like what you're capable of doing when you're not thinking about money, kind of thing. And that's the biggest thing I try to tell people is like when I trade on NinjaTrader, I keep everything in points. I mean, obviously, I know what my P&L is going to be just because I know how to do math in terms of like when it's moving. But at the same time, like I'm always just thinking in terms of points, like kind of like a sport, like a scoreboard. That's the best way to think about it. And whenever you start to over leverage, like you're taking a massive hit into what you're capable of in terms of over like a long data set. If you're just staying with consistent risk that you're able to have room for, if that makes sense. But
Patience,
yeah,
discipline. Everybody in this stream knows that the only reason you blew your account most likely was because you over leveraged. All right, Chris, you got it. Um, and then the problem is that once you're over leveraged and you take that $400 loss, you're not going to then switch to micros to try and get it back, are you? No,
exactly.
you're going to go like, well, I'm just going to, oh, it's moving really fast. I'm going to put two minis on, and then you're just going to get smoked, and then all of a sudden your trade's auto canceled because you just liquidated. So we've all been there. We've all done it. Just the key is not doing it.
Yeah, especially if you trade micros and you get a whole bunch of wins in a row, like the second you size up, you're pretty much putting risk all of your effort into one play, which is not only going to just ruin your P&L, but at the same time, like mentally, that's just going to mess you up. Let's see. Is there any questions anybody has about anything?
Don't eat citral meat. Turtle soup.
We use London, Fair Value Gaps. If you're trading London, I'd really look at where the Asia range was, and when London starts, we usually will take one side of it, and you can look for an inversion off taking Asia, highs or lows, and you could usually just scalp that to the opposing range of Asia. That's a pretty clean London setup usually.
He wants to know. I think he's asking if London fair value gaps are valid in the New York session.
Let's see. Yeah, with something like that, like that's gonna be a little harder to place a stop loss properly. You can't. Yeah, let me see.
High quality setups. Well,
I'm just
Beam,
gonna
that's
look
where
at
we
the
said
description.
just it's post your trade idea before you enter, so we can help you
Yeah,
identify high quality setups. We can tell you
and
no or yes.
and for Gavin, what you're saying in terms of it inverting in New York, you could use that, but like in terms of
Jesus, BXR.
you can use it to gauge sentiment in terms of bias, but I wouldn't be using that for entries. I'd be looking at something that's relative to what we just created. Like in that picture you showed me, it looks like we made a big wick up. I would be looking more at that wick once we displace that fair value gap to gauge whether we're going to want to go higher or lower. If that makes any sense.
BXR. Yeah, okay. So seriously, to answer your question seriously, if you're using the ICT scaling plan, if your account liquidity is 20,000, you can use 10 micros or 1 mini. Oh my gosh. I have to get back to your stream now.
Oh yeah, I was just going to show this in terms of next week. We have all these imbalances here.
Sorry, we were just talking about that too. It's going to take me like 15 more weeks to get to that many contracts, or 10 more weeks. But that'd be great. But yeah, if you're that far above, that you're at the threshold of a mini. But then again, why? Like, why? I just feel like even at that point, why would I want to have? That's a lot of money locked into one contract. I'd rather have 10 micros. That way I can scale out or scale in. You know what I mean? I feel like micros offer just a lot of flexibility as you're going through trades. Whereas if you just have one mini, that's it. So if I have one mini and that's my trade, I don't like to take more than one trade a day if I don't have to. That's going to cause me to have to scale that mini out like at my first take profit if we get there, or break even if we don't.
Let's see. I haven't really looked at what's going to happen next week, like my charts too much. But one thing I noticed is we have all these imbalances. This would be if the 20 low. We have FOMC this week. I'm looking to see if we make a quick rally here. Like, yeah, we just made this order block below liquidity. If this gets smoked here, we're probably going to test lower into these. But if this holds here, we have an easy imbalance to target. which this might happen like in London session, but that's usually what I look at like before a day starts is where do we have imbalances that are opened, because this is going to also be like a buy side liquidity pool here. And if you're looking at something like this order block, like this is going to want to hold. This fair value gap right here is a super old 4-hour that we just inverted. So I would put that like gray. But the fact that we just swept this massive 80-70 level and made this rally end of day, I'm really looking to see how we open up. And maybe we put in like a new week opening gap. That would be nice too. But yeah, we'll see how Monday goes. Might be kind of choppy, but at the same time, it's FOMC week, and we like to set up a range just to like get both sides interested in playing that.
And Bob, don't forget, like if you're on Apex, I don't know what you're on. I think it's Apex. You're only getting 100% of your profit up to 25,000. So if you are 20K, I would think about if you're going to run it up. If you haven't taken your 3 withdrawals already to get to max, I would think about doing that so that you can do a max withdrawal, close the account, and switch that over to live funds, like with the broker.
Yeah. Yeah,
That's
if
what
you're
I'm going to be
20K
doing.
above and you have like plenty of days to where they're not going to hit you for the consistency rule, I would just trade micros and make like small gains a day so they don't look at you funny, and then just take all that out and put it in something else. Because 20K in a live account, you could easily trade a mini with that.
Yeah.
Does anybody have questions about anything?
Anyone? You guys can unmute yourselves and use your voice if you want to. Okay. All right, good.
Yeah, we could do these more often. Like
Everything makes sense.
solid.
All right. Well,
Oh,
that's all I have. Go ahead.
on things on live accounts, I want to open up on Iron Beam. Is there any other like broker that y'all prefer? Because I heard good things about Iron Beam. I was gonna do Tradeovate, but then I heard something about like the live data and stuff that you have to buy now. So I don't know if
Yeah,
that's still going on.
I've heard Iron Beam is good.
AMP is good, I've heard.
Yeah, AMP is super like regulated and solid. Not like the other ones aren't, but AMP's just been around for a lot longer.
I know Ash uses AMP. I think ICT mentioned he uses AMP.
Yeah.
Carmine Rosado might use AMP.
The thing is, like, I
There's
don't,
a
I don't
few.
know if AMP is discounted, so you'd probably have to have more leverage, unless they changed it recently.
Oh yeah,
Because that's
that's
the thing
true.
is, you just want to look at what all the leverage like criteria are, because things like trader bait, I think you don't need as much to trade a mini.
I think Iron Beam is a discount broker as well. Their
Yeah, I've
margin
heard good things
requirements
about
are
Iron
much
Beam
lower.
though.
Yeah,
And I think on Iron Beam you can actually move the brackets on like TradingView
you can.
if you set it up. Yeah, it's nice.
Yeah. Those are the two I was looking at, was Iron Beam and AMP. If that answers your question.
Apex or Top Step, I trade them both so differently.
I like
Like
them
for
both.
Apex, I trade micros and we'll link accounts, and then on Top Step, their micro scaling is not really existent, so I just trade minis on them. I try to go for the bigger accounts on Top Step, like the 150Ks, and then on Apex, I always do the 50Ks.
Mm-hmm.
That's the
I
way to
would
go.
love to get top
Okay.
step accounts with Apex pricing and Apex sizing rules.
Yeah. And the biggest thing with like all those prop firms is just looking at your drawdown amount and making sure you're like formulating your trading plans around that. Because yeah, on Top Step it's a lot easier to have runners because you can just put stops break even and let it run. Whereas on Apex, that's gonna eat into your drawdown.
Yeah, top step is end of day. I don't know if you guys knew that or not, which is really nice.
Yeah, it means
Membership
like if you
isn't
make
real.
profits, you could just like trade with those profits. Whereas on Apex, you'll hurt yourself pretty quick doing
Yeah,
that.
you get liquidated mid trade, even though it's so annoying. Yeah. All right, great. I'm gonna process this. Hopefully the recording's fine. I don't know why it wouldn't be. And I'll put it up on YouTube. Cameron, I'll link your stuff in there and all that.
Thank you, sir.
All right. Well, that's it from me.
Cool. We could do this again sometime if people are out of questions, or even like doing a weekly overview. I don't know. I like doing stuff like this because it also helps me just review price action more, and answering questions also helps me just solidify what I already know.
Same.
Cool.
All right. See you
All
guys
right.
in the Discord.
Peace out.
All right, thank you.
See ya.
See you.